Okay. Good morning, everyone. Oh, good morning. Showing what the, I'm already off to a bad start. Good afternoon, everybody. I would like to call the meeting of the Audit Committee to order, please. Uh, Nathan, are there any public speakers?
Yes, we have two speakers over
Wow,
Zoom today.
very dedicated.
As a reminder, we ask that all public speakers adhere to the MTA's rule of conduct and decorum. I would also like to remind our public speakers that in the interest of time and fairness to all speakers, we limit everyone to 2 minutes. Please be aware that there will be a warning beep to remind you that you have 30 seconds to conclude your remarks. The first speaker will be Maddie Bucky's Highland, followed by Charlton D'Souza.
And thank you, Nathan. And good afternoon, everybody. My name is Matty Bucky's Highland. Happy 8835 and Disability Pride Month. And I would like to say, as we go into the audits are numbers. And look at the book, everybody. It could tell you great things that you would read on and how the MTA is doing financially as we have watchdogs in place, make sure where the money is will be getting going. And second, I'm excited to hear what the auditors will have to say at this meeting coming up. And and I will say that we'll hopefully get the lawsuits held because I know there'll be an executive session at the end of this meeting, and we'll hopefully everything. I'm excited to hear what you will have to say as we're halfway done with 2025. So on that note, please have a great summer, everybody, and hopefully the audit committee will meet again in October, and see you in September. Thank you very much, Nathan.
Thank you. Our last speaker will be Charlton D'Souza.
Good afternoon, Chairman Jones and board members. Chairman Jones, please, you need to audit the MetroCard vending machines. I know MetroCard is being phased out, but there are still people at the 179th Street subway station in Queens, Jamaica Center, Flushing Main Street, and also the other parts of Queens where Nassau and County Express bus customers have MetroCard. Same thing with Beeline in the Bronx. Those machines need to be audited because it's not fair. People are having to pay a double fare. And you always talk about fare evasion, Mr. Jones, and how unfair it is. Well, I agree. The machine should be working so people can pay their fares and take advantage of the passes and opportunities that are available to them. So I'm hoping that you will work on this. Also, the Queens bus redesign. The promotional bus transfer is not being talked about. You'll need to audit the transfers to see how many people are making transfers. Right now, the bus drivers are giving people paper transfers, or people are just walking on the bus. Then, and I told people, I said, if you use your prepaid Omni or the Omni on your phone and you take 3 buses, you should be eligible for the promotional transfer as indicated in the language that you guys submitted. But also, subway riders are not included in that. So you need to look at that again, Chairman Jones. And also, Fairfares needs to be better advertised. That was a program that you pushed for, but maybe y'all could put that on the MT bus time app. That do you need Fairfares or something like that? Because that's where most people go to track the buses, and I think that's where the information would be more user friendlier. And also bus bunching, Mr. Jones. Please, you need to audit the MTA. Why are buses bunching and then there's no buses for 40 minutes? Please look into that. Thank you.
Thank you. This concludes our public speakers.
Okay, thank you, Nathan. Next, we have the approval of the May 2025 Audit Committee minutes. Um, since we don't have a quorum, these will be passed along to the full board on Wednesday. Okay, then we go, Chairman. Monica, are there any changes to the work plan?
No, there's no changes, thanks.
Okay, now we have our independent auditing firm with 5 items that will require a vote. Because we don't have a quorum today, we will move these items again to the full board for a vote. Costas, will you start with a brief update on the management letter reports and answer any questions that you may have? Costas, to you, sir.
Thank you, Chair. My name is Kostas Makrakis, and I'm the Deloitte Lead Client Service Managing Director for the MTA. Together with me today to my right are Patricia Zurita, an Audit Senior Manager responsible for the audit of the consolidated financial statements, Komal Chola, an Audit Senior Manager responsible for the audit of the financial statements of the MTA's employee benefit plans, and Darshan Patel, an Audit Senior Manager responsible for the MTA's federal and state single audits. Before I begin my comments on each report to be issued, I would like to acknowledge that we received the full cooperation of MTA management and staff throughout the course of our audits. We were also granted unrestricted access to MTA's senior management, which greatly facilitated the completion of our work. Dear members of the Audit Committee and Management, in connection with our audits of the financial statements of the MTA and each of the 7 agencies for 2024, on which we issued our audit opinion on June 17, 2025, performed in accordance with auditing standards generally accepted in the US, we consider internal control over financial reporting in order to design audit procedures appropriate in the circumstances, but not for the purpose of expressing an opinion on the effectiveness of the MTA's internal control over financial reporting. Accordingly, we do not express an opinion on the effectiveness of MTA's internal control over financial reporting. In connection with our audits, we have identified and included in the draft letter shared with you as Appendix A deficiencies related to MTA's internal control over financial reporting as of December 31st, 2024. As previously communicated during our in-person audit committee meeting and formally documented in our letter addressed to the committee dated June 17, 2025, regarding the results of our 2024 audit, we did not identify any material weaknesses or significant deficiencies. I would like to remind the committee that there are 3 levels of severity when evaluating internal control findings. The most significant is a material weakness, followed by a significant deficiency, and lastly, a deficiency. Just to give an example, when a company does not perform bank reconciliations, that would be a material weakness. When a company performs bank reconciliations and the preparer is the same as a reviewer, that would be a significant deficiency. When the company prepares bank reconciliation, the preparer is different to the reviewer, but something went wrong there, then that's a control deficiency, and this is our case. We identified 3 control deficiencies, 1 relating to New York City Transit, and 2 relating to Staten Island Rapid Transit Authority, SIRTOA. The deficiencies related to transit and 1 for SIRTOA concern pension accounting, while the remaining SIRTOA deficiency relates to other post-employment benefits, OPEB. Pension and other post-employment benefits represent a complex area of accounting involving actuarial methods to determine the related liabilities and expenses. A significant portion of the financial statements and the disclosures pertain to these 2 items. The process is structured as follows. Management provide to independent actuaries data, and then the independent actuaries calculate using generally accepted actuarial techniques and method the liability and the expenses. We perform procedures to audit the data provided to independent actuary in terms of accuracy and completeness, and found no material exceptions. Then the company's independent actuary perform their work. Our independent actuaries review their work and without identifying any material exceptions. in the process, and then they actually issue the report and provide to the accounting department. And then the accounting department incorporate this financial information into the financial statements and the footnote disclosures. And there was some error, which we identify on time, and the financial statements reflect the correct amount. However, because although the control was appropriately designed, it did not operate effectively. And Patricia will walk us through the cause, effect, our recommendation, and management response on these three control deficiencies. Patricia, please.
Thank you, Costas. We identified two deficiencies involving New York City Transit and SIRTOA's internal control over financial reporting for the year ended December 31st, 2024. The first deficiency affected New York City Transit and SIRTOA and relates to the yearly review of the schedule of other OPEB contributions made after measurement day. The cause, DNT noted that there was an oversight in the review of the schedule of OPEB contributions made after the measurement date as December 31st, 2024, as included the 2023 benefits paid in 2024 and excluded the 2024 benefits paid in 2025. The effect, as a result of this deficiency, there was an understatement of the OPEB deferred outflows reported on the actuary's valuation report for the reporting date of December 31st, 2024, amounting to $28 million for New York City Transit and $392,000 for SIRTOA. Our recommendation: we recommended that New York City Transit and SIRTOA management enhance the review process of the schedules of OPEB contributions made after the measurement date to ensure that it captures the appropriate benefit payment pertaining to the correct year. The second deficiency affected only SIRTOA and relates to the yearly review of the reconciliation between the pension deferred outflows for contributions made after the measurement date and its related prepaid pension expense. The cause, DNT noted that there was an oversight in the review of the reconciliation between the pension deferred outflow for contributions made after measurement date and prepaid pension expense as of December 31st, 2024. SIRTOA made an advance contribution in 2023 for the proportionate share of pension expense on the MTA defined benefit plan based on actuarial determined contributions, which was not properly reconciled as of December 31st, 2024, resulting on a negative balance on the pension deferred outflow, which needed to be adjusted. The effect, as a result, there was an understatement of pension deferred outflow and overstatement of prepaid pension expense amounting $1.1 million. Our recommendation: we recommend that SIRTOA management enhance the yearly review process of the reconciliation between the pension deferred outflow and the prepaid pension contribution expense by taking in consideration the advance contribution for the proportionate share of pension expense on the MTA defined benefit plan and the proper recognition of the related pension expense based on the year-end minimum pension valuation report. We would like to communicate that management agrees with our recommendations for both deficiencies. Thank you.
Thank you, Patricia. That concludes our remarks on the letter to management. I'm happy to address any comments, questions that the committee or management may have.
Better turn on if we didn't hear that. But any questions of Costas and his team? Okay, next, Costas, will you provide the results of their federal and state mandated single audits of the MTA?
Thank you. We plan to issue within the next couple of days our federal and New York State single audit report for the year ended December 31st, 2024. Our uniform guidance reports are in accordance with government auditing standards and the U.S. Code of Federal Regulations and audit requirements for federal awards, and with the compliance requirements described in the New York State Codification of Rules and Regulations. Our reports will include independent auditor's report on internal control over financial reporting and on compliance and other matters based on an audit of financial statements performed in accordance with government auditing standards. It will also include independent auditor's report on compliance for each major federal program and report on internal control over financial and report on schedule of expenditures of federal awards required by the uniform guidance. And the same for each major state of New York Department of Transportation Assistance Program and report on internal controls over compliance and on schedule of state of New York Department of Transportation Assistance expended required by the New York State Codification of Rules and Regulations. For the year ended December 31st, 2024, the MTA incurred a total of $4.8 billion in federal expenditure. Of this amount, $2.3 billion pertained specifically to New York City Transit preventive maintenance activities, which were funded through a direct grant from the U.S. Department of Transportation's Federal Transit Administration. Our audit results for federal awards are as follows. Unmodified audit opinion, that means a clean audit opinion for the financial statements and on compliance for major programs, no material weakness, a significant deficiency identified, no non-compliance material to the financial statements, and there is an audit finding disclosed that is required to be reported in accordance with uniform guidance. Darshan will describe the cause, effect, our recommendation, and management response to our finding. Darshan.
Hi, thanks, Costa. I'm Darshan Patel, and I'm senior manager with Deloitte. And this is my many years. I did the MTA single audit since 2006. You have one, just to give you some summary of this finding. We selected 60 samples for the allowable cost. For the Federal Transit Cluster, is known as. And MTA bus, the finding is related to MTA bus and SATOA. MTA bus use incorrect payroll rates because they have calculated payroll rate based on 52 weeks, while the records, MTA records, calculates on 365 days. So there was a slight difference in the rates used by MTA bus in the billing. And the SATOA were using prior year indirect cost overhead rates. Instead of using 2024, they were using 2023. So that's they are both agencies agreed to it, and they are making correction right now.
Thank you.
Okay.
Asking how material would this be in terms?
The payroll rate were like 20 cents, 19 cents,
Okay.
and it's not many employees they charge.
So it's not material.
But they're correcting right now the billing.
Understood.
Yeah,
They are correct.
They're correct.
Yes, they're correct. And usually in internal controls, you don't assess from a materiality perspective. You kind of see the pros and what went wrong or not. Our audit results for state awards, which amounted to 187 million, relate to one program, the statewide Mass Transportation Operating Assistance. Again, unmodified clean audit opinion, both the financial statements and non-compliance for major programs, no material weakness, no significant deficiency, no non-compliance material to the financial statements, and no audit findings disclosed that are required to be reported in accordance with uniform guidance. That concludes our remarks for the single audit. I'm happy to address any questions you may have.
Thank you, Kostas. Are there any questions? Hearing none, we'll go on to the next part. Next, we have Jim McGovern, MTA Deputy Controller, to provide a management a review of the 2024 employee benefit financial statements, including a discussion on the management's analysis and the required supplementary information to the financial statements. Jim?
I was looking for a,
What's happening? Right.
Thanks.
Thank you. Jim. There's a passing the buck.
and then if I got hit in the eye, there'd be all sorts of things.
Ah, it would be a claim.
So, thank you. Let me just see. Okay, so. So the MTA has 6 benefit plans. I'll just go through them quickly. The MTA defined benefit plan, the MAP-STOA plan, the Long Island Railroad additional plan, the Metro North cash balance plan, the MTA deferred compensation program, that's the 401k 457 plan, and the MTA retiree welfare benefits plan, that's the OPEB plan. Of these 6 plans, 2 of them have closed, the Long Island Railroad additional plan and the Metro North cash balance plan are closed plans. The Long Island Railroad plan has about 12 active employees currently, and the cash balance plan does not have any active employees. On the right, the last 2 columns, you could see the asset levels in the plan. Nothing significant to change from last year. The assets are up, primarily due to contributions, and the stock market's been very favorable to us. And also on the deferred compensation plan, I just want to highlight that the number of participants have gone up about 7,000 or 8,000. Our participation rate is very good compared to other government plans. Oops. Sorry about that. The financial statements, there are 4 basic financial statements to the plans, the management's discussion and analysis, the basic financial statements, which include the statement of fiduciary net position, which is what we call it the balance sheet traditionally, statement of changes in fiduciary net position, we refer to it as the income statement, the notes to the financial statements, and required supplementary information. The last slide I just want to go through, it tells you indicates the pension plan liabilities, the pension plan assets, net pension liabilities, and then the funded ratio. I would say the funded ratios there's no significant change from last year. The single employer are 81% funded. The cost sharing arrangement with NICERS and NICERS, they're 84.6% funded. And basically the weighted average is the funding is 83.3% funded, which is a pretty good funding rate. On the OPEB plan, we're not under any requirements for funding. We have made some investments about 2 years ago, but there's nothing significant to report there. And that is the highlight for the benefit plans.
What, by the way, is the standard in terms of plans, assets versus liabilities? Is there a standard
Well,
as to one that's underfunded?
I don't want to say, I don't know off the top of my head a standard. I could tell you that the state plan is hang on one second. That's
This is more out of my-
94% funded, and
Yeah.
that's sort of like the benchmark, probably one of the highest in the country.
Yeah.
Whereas I think New Jersey was, I think low 40s. If I'm not
Thank you. That
mistaken.
was just for my own
Yep.
edification, nothing else.
So I
Thank you
would
for the
You
report.
should just leave here saying that
Yeah.
they're funded. They're funded pretty well.
So are there any questions, Jim? Hearing none, we'll move on. And continue the discussion of the pension plans. Costas will discuss the results of the audit of the various pension plans. Costas, to you, sir.
Thank you, sir. We are in the process of completing the 2024 audits of the MTA and agencies' employee benefit plans, and we will issue our audit reports within next week. We perform these audits in accordance with generally accepted auditing standards in the U.S. We are not aware of any changes to previously adopted accounting principle practices or accounting estimates. No control deficiencies identified, no incorrect misstatements or disclosure item passed. Komal will provide a more detailed description of the plans we audited, the work we perform, and our conclusions. Komal, please.
Thank you, Costas. Good afternoon, everyone. As Costas mentioned, we will issue our audit report on the 6 plans within the next few days. Those 6 plans include MTA Defined Benefit Pension Plan, the Long Island Railroad Company Plan for Additional Pensions, MTA Deferred Compensation Plan, Metro-North Commuter Railroad Company Cash Balance Plan, Manhattan and Bronx Surface Transit Operating Authority Pension Plan, and MTA Retiree Welfare Benefits Plan. For all these plans, our opinion is unmodified. It's a clean opinion. We do add an other matter paragraph, which is basically required under the auditing standards, and it relates to the required supplemental information that is disclosed along with the basic financial statements. The supplemental schedules, including MD&A, are the responsibility of management, and although they are not part of the basic financial statements, but they are required by the Governmental Accounting Standards Board, who considers it to be an essential part of the financial reporting for placing the basic financial statements in an appropriate operational, economic, or historical context. We have applied certain limited procedures to these required supplementary information, which is what is required in the auditing standards, and it consists of inquiries of the management about the methods of preparing the information, comparing the information for consistency with management's responses in relation to our inquiries, and other knowledge that we obtain during our audit of the basic financial statements. We do not express any opinion or do not provide any kind of assurance on the supplementary information because of the limited procedures that we perform as previously mentioned. Lastly, with respect to the overall audit of the plans, we did not note any corrected or uncorrected misstatements, and we did not have any other findings that we would like to bring to the attention of the committee. Thank you.
Thank you, Komal. And that concludes our remarks on the audit for pensions.
Questions of Costas on this report? Hearing none, we're now going to have Costas will brief the committee on the results of the review of the MTA Inspector General's 2024 office operations and expenses based on an agreed upon audit procedures.
Yeah, thank you, Chair. We were engaged by the MTA, the Inspector General, and the Auditor General of the MTA to perform an agreed-upon procedures engagement and conducted in our engagement in accordance with attestation standards established by the American Institute of Certified Public Accountants. We were not engaged and did not conduct an examination or review engagement, the objective of which would be the expression of an opinion or conclusion on the MTA Office of the Inspector General's budget accountability for the year ended December 31st, 2024. The MTA, the Inspector General, and the Auditor General of the MTA have agreed to and acknowledge that the procedures performed are appropriate to meet the intended purpose of assisting the specified parties in evaluating the MTA Office of the Inspector General's budget accountability for the year ended December 31st, 2024. We make no representations regarding the appropriateness of the procedures, either for the purpose for which our report has been requested or for any other purpose. These procedures mainly consist of us looking at employee-related information, payroll-related information, and vouching this type of information back to source documents, reviewing purchases, and ensuring that the related requisitions and purchase orders, approvals were obtained, agreed disbursement to supporting documentation, including invoices, purchase order checks, or obtained bank reconciliations. We found no exceptions to report to this committee as a result of the 14 procedures performed in total, except for 2 procedures consistent with prior years as outlined on paragraph 13 and 14 of the draft report shared with you. We were also engaged by Long Island Railroad, Metro North, Transit, Bus, and CIRTOA to perform an agreed-upon procedures engagement on the reporting and monitoring of data on the Federal Funding Allocation Statistics Data Form, FFA-10, to the Federal Transit Administration, FTA, and the agency's compliance with the FTA standards that the information included in National Transit database for the year ended December 31st, 2024 is presented in conformity with the requirements of the Uniform System of Accounts and Records and Reporting System final rule. With these reports, we complete our 2024 audits, reviews, and agreed upon procedures engagement.
Committee's review and approval. Costas, again.
Thank you, Chair, again. For financial year ending December 31st, 2025, the first report to be issued is for the review of the MTA's interim consolidated financial statements as of and for the 3-month period ended March 31st, 2025. For a brief status, we are in the process of completing our quarterly review procedures. A review of interim financial information consists primarily of analytical procedures and making inquiries of those responsible for financial and accounting matters. A review is substantially less in scope than an audit. The objective of an audit is to express an opinion on the financial information. Accordingly, we do not express an opinion after our review. Based on the review procedures performed at this time, we are not aware of any material modifications that should be made to the interim consolidated financial statements in order for them to be in accordance with accounting principles generally accepted in the U.S.
Thank you, Costas. Are there any questions as to this part of the report? Okay. We will accept the following 5 reports, again, in recognition that we do not have a quorum, and recommend them to the full board for their approval on Wednesday. The management letter reports, the single audit report, the pension audits, the review of the MTA Inspector General's Office, and the first quarter of the 2024 consolidated financial
It's the
statements.
2025. The
2025. My error. Sorry. Okay. Next, Costas is off the hook.
Yeah, thank you.
Next we'll shift it over to Lamont Kears, the MTA Chief Compliance Officer, who will brief the committee on selected aspects of the Enterprise Risk Management Program, the Ethics and Compliance Program, and financial interest reports. Lamont will also give a brief update to the implementation status of prior audit recommendations. Lamont, it's
I'm
yours.
on the hook. Okay. We do have a presentation. So we're going to first talk about enterprise risk management. Okay. You all know me. I always like to start off with a little education, just reminding everyone that this program is required under New York State Public Authorities Law. It is a specific requirement that this board oversee that program to ensure that we are assessing risks, that we are mitigating those risks, that we are ensuring that employees have access to clear and concise policies, and that we are engaged in ongoing training efforts to ensure employees understand the requirements of our policies, our procedures. All right. This doesn't count towards your ethics training. I'm sorry. Okay. I heard you. So there are basically four components: enterprise risk assessment, control self-assessment, issues management, and policy lifecycle management. So first, let's talk about risk assessment. A risk assessment is just what it sounds like. We reach out to every department within the MTA and go through a process by which we ask them, what are your key business processes? Have there been any changes? Are there any changes to your objectives? Are there any changes to the risks that you're facing? Are there any changes to the controls that you are using to mitigate those risks? We work with risk managers. We have over 1,000 risk managers throughout the MTA in every department that work with us to conduct that assessment. As you can see, it's pretty constant. As of 2025, we have launched 1,341 assessments. As of right now, 145 of those have indicated that there have been some changes. Again, it's an ongoing process that we conduct. These are both not just financial, but operational risks as well. It covers a very broad spectrum of what we do at the MTA. Once we complete the assessment process, we go through a process of testing the controls. Again, these are both financial and operational controls. We have testers as well as risk managers. We have over 1,000 individuals also involved in the testing process. These are individuals who are subject matter experts, right? So, for example, if I told you I tested the braking system on a train, you may not want to get on that train because I'm not an SME, but we have SMEs who are involved in that I am not an SME. Who are involved in that process. We are involved with ensuring that the testing is being done according to the test instructions. We provide assurance that the information is complete and that we are engaged in ensuring that the ones that fail, and in this case, you can see as of right now, we have 19 that have failed, which is like 1%, which is a very good thing. But we ensure that those that do fail, that mitigations are put in place to remedy that failure. Okay. Policy management is also an important part. MTA, we have over 700 policies covering a broad spectrum of things. I think some of you heard at last year's governance committee. I've been asked to try to consolidate those to have more all agency and less individual agency policy. So we've been very active in doing that. We reviewed almost 100 policies last year, and there have been some consolidation, and we're working on more. I know everyone loves policy, but it's an important thing because, again, it's required by law that employees have access to policies, but it also helps in terms of efficiency of operations as well. Key risk areas, as always, cybersecurity, equipment maintenance, reputational risks, safety, security, succession planning. Every year we kind of go out and ask management, what are the key things that you're seeing? What are you thinking about, worrying about? This is what usually comes back, and this is what came back this year. So issues management. I'm moving. Okay. Issues management. Again, issues management is the process by which when Monica's team issues a recommendation, or the Inspector General, State Controller, any source issues an audit recommendation or finding, or when an internal control testing fails, that generates findings and remediation plans, and we are actively tracking those within our systems to ensure that we have a historical record, which is important, right? That old thing, if you forget your history, you repeat your history. So we make sure that we have a record going back of what those findings were, why they happened. So we are very busy. As you can see, they're being created on a regular basis, but we're also closing at the same rate. So Monica, we are trying to keep up with you, all right? Which is important, again, because it's an ongoing process, which is a good thing. The things are being found and resolved. There are a process, again, that we have. Plans are implemented, remediations are worked on, agency department says they've completed them. There's a process that we have within our current system that validates that. So if a department says that they've implemented a remediation plan, it has to go to compliance first. We review it, We either agree or disagree that they have sufficient documentation and evidence, right, that they've actually done it. If we think they've done they have sufficient evidence, we then send it to audit services for their concurrence. If they don't concur, we work with the departments to find out what information is needed so that we can close these out. So these are the ones that are now implemented according to the various departments, but are awaiting basically our verification and concurrence. So that's my presentation on enterprise risk management. Any questions? Okay, great. So,
Talking initially about the fact that they put the board through a similar, much more involved lecture on this. So we're not finished with the board. So, but Lamont does a very great job on that. Okay.
Thank you. Next presentation. All right. Everyone's favorite topic, ethics compliance. So I think as you remember from last year, we're celebrating 20 years, both 20 years of our code of ethics this year, and it was actually 20 years ago, as of December 2024, that the MTA board actually created the corporate compliance department and actually hired me. Yes, I've been here 20 years, Paige, right, to build the program. So it is a testament to this organization that we've stuck with it all this time. We started off with a very small department of one, and now we have more than one. Okay. So let's go through the presentation. All right, everyone knows the Code of Ethics books and building trust, ethical standards. Quick in review, 20th anniversary, as I mentioned. We've engaged some new things this year that I think were very, very successful, including new conflict of interest certifications that we're utilizing our RSA Archer system for, and an outside activity one as well that's being used in an electronic system, the Archer system. We've also launched new on-demand ethics training, so I'll talk a little bit about those. So matters handled. So in 2004, we handled over 2,000 various ethics matters. So far this year, we're already up to over 1,000, and we anticipate we will probably get close to that 2,000 plus mark by the end of the year. The matters have come in various ways. As you know, we launched, I think it was a year ago or 2 years ago, ethics requests, which is again in our current Archer system that employees can submit requests electronically. We used to get tons of requests via email, but now the ethics request has taken over the lead in that, which is really great because it doesn't get lost in my emails or my staff's email. We're able to track it and monitor it and communicate with employees with their requests. They can see the status of it themselves without having to call us to find out where they are. We also get matters from the IG. We get matters via, obviously, Teams. The helpline accounts for 2%, about 2% of what we get in, as well as in-person calls and our outside activity management system, which I'll talk a little bit about as well. Okay. I'm just going to jump. Issues versus inquiries. This is, I think, a particularly important slide because it goes to the trust that has been developed in the department, right? So the majority of what we get are inquiries. What are inquiries? Inquiries are basically, I have a question, I'm thinking about something, I did something, I'm not sure it was the right thing, I want to talk about it. Those are inquiries. Issues are just what it sounds like. We got a problem. Something went wrong, I got caught with my hand in the cookie jar, what can I do now? We get more inquiries than we get issues year on end. And I believe that's fundamentally because our employees, trust that they can come to us and get advice about what they really should be doing. Matters by category. Most of the matters that we handle, a lot of prohibited source events, employees are going places, we review it. Lots of things on conflict of interest as well. We manage a whole host of conflicts of interest, both financial, anti-nepotism, outside activities, etc. I'm conscious of time, so I'm going to move a little quicker. For all the matters that come in from those various sources, again, this is another slide I think goes to the trust that employees have placed in the program. Most of the people who reach out to us tell us who they are. I did something, I'm thinking about doing something. They don't have to tell us who they are, but as you can see from this slide, usually they will tell us, this is who I am, and this is my problem, whether it's issues or inquiries. Now, obviously, with issues, more likely not to tell us than inquiries, right? Right? We're always more likely to ask a question than, right? But still, overall, sorry?
98% still tell you who they are.
They tell us who they are because they are the fundamental trust. I think as those of you who took the ethics training know the one thing we tell you right off the bat, our job is to help you, not to go after you. So, you know, we've been very successful in doing that. Okay. Conflicts of interest. About 35% of the conflict of interest we deal with are outside activities. We deal with a lot of future employment negotiations, financial interests, family relationships. So we deal with a very broad. We've been getting a lot of reverse two-year bar as we've been bringing people in from the private sector and dealing with their, ensuring that their dealings with their former employer does not create the appearance of a conflict of interest or self-dealings. So we have a very broad spectrum of things that we deal with as it relates to conflicts of interest. Okay, resolutions. Luckily, a lot of these things are being able to be resolved with no further action warranted. But we do have a good percentage, about 34% end up being a recusal, that we have to manage a recusal of some sort. There are some things that are what are called denied, some things that we are able to approve the activities. But again, the vast majority of things we are able to resolve or deal with as, in terms of recusal. Conflict of interest, right, dealing with outside activities. Outside activities, anytime an employee engages in an outside activity, there's a requirement that we vet it and approve it to ensure that there are no issues. 2024, we had 797. So far in 2025, we're already up to 107 outside activity requests submitted. Uh-oh, did I break it? Okay. So, as you remember, I mentioned before we launched in Archer a new outside activity certification. So the month before we launched the certification, we received 68 outside activity requests. The month we launched the outside activity certification, we received 283. Yeah, so the certifications are interesting the way we designed it, because it's not just asking a question, did you do this, did you do that, right? If they tell us they have an outside activity and that they have approval for it, the system automatically requires them to then go into the outside activity management system and verify the fact that you have it. So we trust you, you're telling us the truth, not a political statement, but we do ask you to verify it by going into the system. So it triggered an enormous amount. So post-certification, we received over 400 outside activity requests. And these are employees who have now self-disclosed that there are some issues, some problems, you know, that we need to address. And it actually was a very good thing that we did it this way. Okay. I clearly broke the Raph, I broke the technology.
You know what? We're going to have to ask Jay for
Okay.
the replacement.
As a result of this, obviously, there are 380 self-disclosures of potential issues around outside activities. Ethics training, everyone's favorite topic. We provide an enormous amount of training across various platforms. In 2024, we provided 2,800 trainings. Employees were trained. As of this year, we're up to 10,000, over 10,000 employees trained, ethics training. Okay. Communications, we have an ethics portal which is being actively used. We have over 20,000 employees who have actively accessed our ethics and compliance portal, which is a really great thing. So that's my presentation on that. Any questions? Well,
And next, we have Monica Murray, the MTA Auditor General, Brief Committee on the status of the 2025 audit work plan. Monica, it's yours.
Thank you, Mr. Chair. I'm going to do an abbreviated version of this.
Okay.
The full report's in the book, but I'll just sort of give you the high level. Here we go. Year to date, we've completed 39 financial, operational, and technology audits, including onboard and pension QA support projects. We identified 106 findings and made recommendations to improve transparency, governance, and internal controls while reducing risk. These audits identified potential cost savings and efficiency opportunities of $4.5 million. This averages about $174,000 in cost savings identified for each audit conducted. We also performed 448 reviews related to capital projects. This work included a review of cost proposals, as well as interim and closeout audits to ensure contract billings are in accordance with contract terms. When requested, we assisted management in their review of claims to ensure any increases were justified. Third-party question costs were $9.5 million year to date. Our past experience has demonstrated about 80% recovery rate. Hopefully leading to an estimated $7.6 million in recovered costs. We also work with the IG on Sandy. I don't know if I have to hit the, there we go. The Sandy audit group. So that's been in place since 2013 to identify cost savings. Since then, we've audited $584 million grant expenditure dollars over 165 projects, leading to 442 recommendations. To date, we have identified cost adjustments of nearly $67 million. That means we're averaging over $400,000 worth of savings for each project we complete. We meet with the IG quarterly to discuss the Sandy work and provide a combined report to the FTA on the work of both the IG and MTA audit. We committed to the FTA that we'll follow up on all Sandy audit recommendations, and we continue to do so in addition to our audits of the ongoing projects. So a lot of the report here is in the book. It's more highlights of what we've been doing. But I did want to, I asked, we have auditors of the quarter. So I did ask them to join us over here, Syed and Nanita. So we started this Auditor of the Quarter program. I'm excited to announce our winners of Quarter 2 this year. Nanita from our operations team performed a number of audits way ahead of her goals. You can stand, Nanita, so everyone can see you. Way ahead of her goals this year, so she's almost met her goal this year in July. Her hard work led to opportunities of greater oversight of both services provided and vendor billings, and found significant cost savings for the MTA. Thank you, Nanita. Syed also did great work this quarter. One of his standout projects was the Metro North Specialized Equipment Resiliency, in which he developed recommendations to strengthen internal controls to better meet federal requirements and improve maintenance on specialty equipment. Nanita, Syed, thank you both for your hard work and commitment to the MTA. I'm really proud to be part of your team, so thanks so much.
That's it?
That's it. We got right.
Thank you, Monica, for those reports.
Sure.
We're going to now have an IT presentation from Raf Portnoy.
Sure.
Okay.
Thank you, Chair. So I have 5 pages today in my presentation. Thank you, Jay. Congratulations. I have 5 pages today. If I spend a minute on a page, I should be done in 5 minutes. So let's see if I can get this done. Emphasizing the importance of transparency and accountability, today's report aims to inform the board about the progress on ensuring we're operating effective and efficient IT function in support of the MTA objectives. Establishing clear accountability to fund stewardship is vital for maximizing organizational value. This particular initiative, and I want to point to this, shows this particular initiative is to identify cost overruns and underutilized budgets through benchmarking, which helps align spending with strategic priorities. The MTA IT team is collaborating closely with strategic initiatives and OMB to develop a transparent reporting process that categorizes spending, promoting a culture of transparency and performance. This effort will ultimately reduce risks and enhance financial oversight and will help us with clear prioritization on IT investments. This is a humongous effort that's done collectively across the entire MTA, and it's already yielding value. Achieving 99.8% uptime availability for critical systems across all MTA agencies demonstrates the effectiveness of the IT team's efforts in optimizing staffing and skills. And I'm going to spend a second on that last square. This high availability is crucial for maintaining operational continuity. Additionally, increased oversight of IT-related procurements and a focus on timely service delivery have resulted in over 90% of major IT initiatives, as we measure them along the way every 2 to 4 weeks, resulting in over 90% of major IT initiatives being completed on time and within budget. And then finally, notably, the reduction of reliance on external consultants. Now, this happened over the past couple of years, not just the 12-month reporting period, but we felt that this was important to highlight this. Reduction of reliance on external consultants by 60% since 2023 reflects a significant improvement in internal resource capabilities. The reason we highlight this is because the work hasn't gone away, right? The amount of work is actually increases. What we have learned early on is that it is much better for us to invest into our internal resources, direct the funds into hiring, training, and retaining our own employees, as opposed to consistently relying on external consultants. So we have not hired as many people as we have consultants, we reduced the overall staffing model, and yet we're able to deliver much better quality at much greater speeds because we're investing in people. So this particular initiative had amazing results. We saved a lot of money, and we're also able to deliver on critical projects and critical infrastructure areas. MTIT, in addition to what I said before, MTIT has made substantial strides in optimizing services and software expenditures. By deactivating unused telecom circuits, and I know it sounds mundane, but dollars are dollars. By deactivating and using telecommunication circuits, the organization has realized over $1 million in annual savings. Furthermore, renegotiating pricing tariffs and omnibus connection savings and software licensing has led us to a reduction of $3.5 million in software costs. So we sat down with vendors, we looked at the tariffs. We haven't done it alone. We've done it with the help of many, many people at the MTA, but these are direct dollars that we were able to contribute back to the operating budget. These strategic moves not only enhance operational efficiency, but also contribute to a more sustainable financial model for the organization. And you can see other savings along the way as well. And we're not stopping. This is a continuous project. And then if we move away a little bit from the cost savings and operational efficiencies, we argued to put this slide in because we're very proud that we were able to partner and support New York City Transit with their Google proof of concept, and I felt that the board should be aware of this. This particular engagement was featured in newspapers and magazines, including the Wired magazine, where New York City Transit and Google put a phone into our train cars, and they were able to go and look at the vibration data and therefore identified where the track issues are. Therefore, potentially, we have an opportunity to start looking at this and saying, how can we do these things more efficiently and effectively? MTIT has been involved. We're very proud of the overall success. And as you can see, the model identified 92% of non-conformity locations found by the track inspectors when they physically walk the tracks. This concludes my report today. Thank you.
Any questions? If none, we'll move on. Now we're going to go to executive session. The next item of business is convening to discuss matters related to litigation. Thank you.
Thank you.
We're going to adjourn in.
Okay, fine.
I'm amazed with how much stuff you cover. It's just not, which is good. It's really, as you cover.
It was a board idea back in 2004 to combine governance, risk,
Mr. Chairman, can I make a motion to adjourn?
Absolutely.
Thank you.
You don't have to sit down.
Yeah, no, you don't.